Most of us don't want to go through 70 or 80% declines in the Bitcoin price. Most people want to time the market, but there's many ways that lead to Rome. There are many approaches that try to identify when Bitcoin peaks and when it potentially bottoms. And the nice thing about the CBBI index is that it combines several approaches. Now, I think there are three major approaches that used to work very well to time the Bitcoin market in the past, and that might continue to work in the future. The first one is a momentum-based approach. So we might use something like the RSI, we might use something like moving averages. We just look at how quickly is the price changing over time. And if it doesn't rally as quickly anymore as it used to be, it might make sense to sell. When it doesn't decline that quickly anymore, it might make sense to buy. A second type of approach is to just look at trading ranges. How much did Bitcoin in general in the past increase and decline? We can use things like logarithmic regressions to then determine are we currently comparatively low or comparatively high. The third type of approach is to look at reference prices, as in what's the current average cost basis of the market. Is the market currently in aggregate already in losses? So will that potentially lead to less selling in the future? Or is the market currently massively already in unrealized profit, where then some people might consider to take that profit? Now, the nice thing about the CBBI is that it combines all of those types of approaches. And while Bitcoin in US dollars tends to go up over time, Bitcoin relative to the Nasdaq 100 has much less growth, as in it becomes more and more important to avoid those larger crashes. Because from one cycle to the next, we might not see that much more outperformance without timing the market. Yes, we make money in dollars, but we don't make much money relative to other risk-on investments. And so here are the approaches that the CBBI combines. We've got the Pi cycle top indicator, that's a moving average based indicator, trying to determine when the market accelerates very quickly and when it might thus be overheated. Another moving average based indicator is the Puel multiple, looking at miner revenue, and another one is simply the 2-year moving average. So let's look at all of those components of the CBBI and see how those different approaches impact the combined metric. The total value, by the way, is currently at 56%. The idea is that we want to be less exposed to the market whenever we are closer to 100%, and we are more exposed to the market whenever we are closer to 0%. We can just use a floating rebalancing approach, as in we might be almost 100% in crypto whenever we are close to 0, and we might be almost entirely out of crypto when we are close to 100. The degree to how much we de-risk and add risk exposure is, of course, individual preference. But let's just look at those momentum indicators first and see how this changes the CBBI. This is the aggregate index. This is the momentum-based index. Isn't it interesting how similar those charts look? The momentum-based index would have given us a better sell signal in April 2023, and it also would have de-risked us a bit earlier once we hit 73K in Bitcoin. The combined index didn't show that high of a value. Currently, momentum doesn't look too bad. It's at 66. That's higher compared to the metric. By the way, if you're enjoying this video so far, then feel free to give it a like. It will help to spread the word. It will tell the algorithm to show the video to more people. Thank you very much. Let's now only use the reference price base models. So how much is the market currently in profit or in loss relative to the average investor's cost basis? We've got the net realized and unrealized profit and loss. We've got the realized HODL ratio, how much short-term trading activity is there currently. We've got the market value to realized value z-score. So this looks at the current average profit relative to volatility. We've got the reserve risk, again, a miner-based metric. And we've got the Wuble Topcat versus coin value days destroyed. So this measures how much dormant Bitcoin got reactivated. What are the long-term diamond hands doing? When are they selling? So you're looking at reference prices. We're looking at long-term holder behavior. And this is the combined metric. This again is the overall combination. this is the combination of reference prices. And again, we can see how the numbers are very, very similar. There's barely a change between those two charts. It is currently very low at 54, but still, right, we're using a completely different approach. Instead of following momentum, we're just looking at the reference price. How much are people currently in profit or in loss? Yes, we get a very similar chart for the combined chart, for the momentum-based chart, and for the reference price chart. Let's go with the Trololo trend line. So that's just a regression. How much did Bitcoin on average grow over the years, and how much are we currently above or below that trend line? And of course, since we now just look at a single indicator, we tend to be at the extremes a bit more often. But that also gave us quite good buying signals, even as we are rallying from $200 all the way to $1,000. So this indicator still gave us the signal to buy, even after we've already 5x'd in the price. And that was the right signal, because afterwards we went all the way to 20K, right? From 1K to 20K. But again, this indicator is not very high, not very low. It's currently the lowest across all of the ones that we've looked at, 41. We might already start slightly buying because we are above the 50% average value. But again, we are not at an extreme value at all, right? So we should not be super aggressive about getting into this dip. Now, I find this fascinating because no mathematical model is perfect, but some are useful. Once we combine the useful models, interestingly enough, they do give us similar results, even though they've got very different ways of calculating bottoms and tops. Every single one of those models says that we are not extremely depressed in the price. Every single one of those models says that there is a good case to be made that the next year might actually be bearish, that we might continue to sell. Now, there is a caveat to that story, and that is that we don't necessarily always turn around at the extremes, as in we did go from 100 all the way down to 0 back to 100, but we also once turned around at 60. We also turned around at 20. And now we might be entering another bear market without even ever reaching the 90 mark or the 100 mark. And so really rebalancing a portfolio is better than going 100% on and off based on the extreme values. Imagine, for example, you were quite heavily invested already over here when Bitcoin hit 3.5K. We didn't hit 0 in the CBBI, but we did have 10. And then as we cross the 50 mark, you're taking profit because Bitcoin is becoming, relatively speaking, more expensive. And then as we go below 50 again, you're buying again. And as we go above 50 again, we're selling. And so we can simply take 50 as our reference point, indicating that we should actually still sell now. It's not too late to sell. We are still slightly overvalued in the grand scheme of things. If Bitcoin's price history is representative of what's going to come in the future as well. Because nobody knows if the structure that has been prevailing for the last 16 years will continue to do the same thing. Now, if you find this all a bit complicated and you simply just want to copy trade whatever I do, then there's also the premium membership of this channel. So whenever I bet on rising or on falling prices on a particular cryptocurrency, I announce this in the channel. And in July of this year, we also opened an automatic copy trading pool. That pool so far has made 17.6%. While Bitcoin during the same time period crashed by more than 22%. That's the idea. We want to bet on performance independent of the macro environment. We might just go sideways in the market and we still make money. And if you're going down, we try to protect that capital. And we're achieving this by doing something called macro hedging, right? So we go long, say, a particular cryptocurrency while we go short the entire market. So we're really just betting on the delta. And so we're not really interested what the general market is doing. Even if we are in a bear market, by just betting on the deltas, we can still produce performance. You can simply copy trade and even do this with leverage, right? Here are a few trades made by community members. Or if you want to invest in the next copy trading vault, that will be available to the annual members of this channel. The next copy trading capital pool opens in January of 2026. Thanks again for watching. Hope to see you on premium. Link pops up here on the screen. See you next time. Cheers.